Hey everybody, welcome in. These videos are really hard to do because I already see people that hold this thing that become very partial, and you have a thing called the Cardano army, etc. People don't like people saying bad things about other people's bags. But first, before we jump into this video, this was the most highly requested, second most highly requested from the community. Thousands and thousands of votes asked me to make this. So here it is. And I'm completely objective. I don't shill. I don't pump anything. I just share what I see. So first of all, let's jump in and talk about should I sell with Cardano. First of all, challenge about math, money, and freedom. And this approach is purely based on quant and data. Okay, that's it. And if anything is wrong in this video, let me know, but I guarantee you it's all right because data is always right. Second of all, it's edutainment. And third, let's the precursor. Like last time, I value tokens based on first principles thinking. And the idea is to break down complicated problems into basic elements and make them whole from the ground up. My job here is to protect the retail investor and make sure they maximize their gains. Second of all, I mentioned this had thousands of votes. Third, all decisions are based on fundamental analysis and technical analysis. And it's not designed to offend anybody. And by the way, I never ever made a should I buy Cardano video. Anybody who's followed me all year since I started this channel, I've never been a fan of Cardano. I never found it investment worthy. And I always, early this year, I said it's only a matter of time before Solana flips Cardano. And it did a few months ago. So here we are. Let's talk about how I am different, though, to the rest of the world. If you look at all these other YouTubers, they all see Cardano going to $10 this year. Okay? All of them. So maybe I am desperately wrong, but I haven't been this year. So we'll see. The question is, who do you follow and who do you listen to? Please, that's up to you. Do your own research, etc. I just share what I know. Now, let's talk about the Cardano Focus. First of all, Cardano is heavily focused on Africa. I admire Charles Hoskinson. Did I say Charles Cardano? That'd be funny. He's very admirable. He has noble causes. He's very intelligent. He's very funny. And he's very convincing when you listen to him. And I listened to him during the summer of this year. And I was like, because I never believed in it and didn't see any data that, supported my investment thesis in Cardano. But he was super convincing this summer about the new smart contracts platform, the Mary Hard Fork, Alonzo, etc. And the fact that he is helping Africa, I thought that was huge. So I want to get that out of the way. I'm very supportive of that. The question is, though, when you look at Charles, who is the VP of sales and the CEO of IOHK, he's basically the key guy selling a lot of stuff. And people give me a hard time about, Solana centralized or whatever. It's like, just look at this and then talk to me, okay? So, but if you want to build a blockchain that generates a lot of value, I do question how the VP of sales, Charles, goes after certain countries. Burundi, I know they've got a very sad and tragic history and the worst leaders ever, but that's a separate issue. I'm not going to go there right now. But to put things in perspective, as an investor, which we are, the respective GDP of Burundi is $3 billion, $3.2 billion. The Tesla market cap is 1.07 trillion. So by comparison, the country's GDP is less than a third of 1% of the market cap of Tesla. So it is a tiny country. Is Burundi, when they sign their MOU to maybe do a central bank digital currency, is it going to be a game changer for Cardano? Not at all. It's going to be a complete nothing burger. Now let's look at the correlation between Cardano and Bitcoin. The question is it correlated? If Bitcoin pumps, if Bitcoin goes to $100,000, will Cardano follow? And sometimes no. The important thing to note here is the correlation. And the correlation as recently as the 5th of November was only 0.57%. So it is not correlated, which is a difference. So the question is, what does it look like compared to Ethereum? So the Cardano correlation to Ethereum here, you can see the year started very strong for Cardano. We went up to an ADA per ETH of 0.001, which was huge. But ever since then, it's been bleeding, using Benjamin Cohen's term, against Ethereum. And it's now back at a third of the all-time high of this Cardano to ETH ratio. And if you look at buying signals, there's not many of them out there right now. Now, we did have a big Cardano pump over the last couple of days, and it's moving well. But let's check out the smart contract platform ranking. And this is important to see how Cardano ranks up in the peer group. Cardano was number 3 at the beginning of the year. And Cardano is still up 717% for the year, which is stunning. But most gains were very early in the year. Now, Solana flipped Cardano, I mentioned a few months back. ADA is still at 2% crypto dominance, which is also very big. But if you look at other names like Avalanche and maybe even Polygon, Matic, who I'm a big fan of, they could very easily flip Cardano in the near future. Even Polkadot could maybe come back alive and gain traction. So there are important things to look at. How does this chain stack up against what I call the murderer's row of smart contract platforms that are coming for it? And they are all operational. They're all highly scalable. They have very little bugs. They've been running for a long time. They run DEXs and dApps, lots of TVL locked, etc., etc. Lots and lots of goodness. And that's what I look at when I rank a smart contract platform. Now, this one was disturbing to me. So when you look at Cardano holders versus speculators, and this is blockchain data, and I assume it is completely correct, but I was stunned by how low a percentage the long-term holders of Cardano were. Very, very strange. Only 6.95% of Cardano holders hold Cardano more than 1 year. Think about that. 70% are cruisers. That means they've had it for 12 months or less. And 25% are active traders. So let's maybe put this in comparison to Ethereum. What does Ethereum look like? Ethereum is 60% long-term holders. Okay? Very, very different. The amount of active traders is very, very small. And the cruisers make up about 30%. So just to put things in perspective, so I'm not biased here, very different. And I was surprised by that statistic. Now let's talk about the most important thing. The big reason for this is retail pumps and whales dump. So who are the people pumping this? When you look at social sentiment, it is 98% positive. Cardano is going to solve the world's problems. Cardano is going to fix this. Cardano is amazing. Cardano is not a ghost chain. Cardano is going to $10. It is unbelievable how positive the sentiment is. But the question is, what's behind it? Because it's almost overly positive. So let's dig into some data. Let's look at some history and try to get a picture of exactly what happens. So probably the most important thing to know is how retail investors get screwed over by people who shill coins and early investors, newbies, etc. And the question is, I don't know if the people who are shilling these coins are in cahoots or not, but it's very suspicious when you see the timing of when the whales dump. So during September 5th, whales dumped a ton of Cardano, all in one day, all at the same time, all at $2.97. We're talking multi-million-dollar transactions dumps. These were not retail investors, and they're dumping on the retail investors who were left holding the bag. They get knocked over the back of the head, and they're like, but hold on, I'm gonna wait. So I'm gonna wait for it to go back to $10 or go to $10 as everybody promises. And people are still hoping for this. Some people have even more dramatic price predictions for Cardano. But the question is, okay, it happened at $2.97 on September 5th. Will it happen again if it gets anywhere near that? That is my concern. Maybe. So the question is, let's look at the chart. This is the exact area where the whales dumped. They nailed the bottom. It was perfectly orchestrated, perfectly timed. You can't make this up. I'm just sharing on-chain data here. And you can see they nailed the top. So they're very good investors. Are you? So the question is, why would they dump? So typically, it's because of things like insider information. Now, I don't know why, but maybe they knew Alonso was going to fail. Maybe they saw technical bugs in the code. Maybe they saw the fact there was no adoption. Maybe they felt the Sunday swap was going to fail the delivery deadline, the DEX that they have, etc. Who knows? But the point is, people knew. They nailed the top and dumped during what was supposed to be the middle of a bull run. So take that as you will. Now, bugs continue to plague the platform. I won't talk more about all the bugs. I won't go into all the stuff, but it's been nothing but what they call snafus. But, don't believe the FUD. but things are delayed time and time again. Things get congested. Things don't work. Certain smart contracts can only handle one contract at a time, all that type of stuff. Again, my job is to be very objective and honest and help guide people make investments. So you'll hear from the proponents, ignore any FUD. There will be bugs. There will be congestion. We're pushing the network hard, but that is what a testnet is for and an essential part of our ongoing journey. This is what they will probably say. Now, talking of congestion, other chains get congested too. Ethereum is congested every day. Solana gets congested from Radium when things go haywire with NFT sales. It's not a DDoS attack. It's congestion. So everybody can get congestion. Maybe if somebody eats some bad food, you get some congestion too. It's normal. But let's go a bit further. Let's talk about where we are from the all-time high. Here you can see we are over nearly 55% from the all-time high. Now, historically, when I look at crypto, that's a very, very bad sign during a bull run. You want to be bumping up against the all-time high. You don't want to be more than halfway away from it. That is not a good sign. So let's look at Google Trends. Do people care about Cardano? Google Trends globally over the last 12 months, we are back to one-year lows. And that means nobody seems to be interested in Cardano. Also, institutional money doesn't flow to Cardano. Whole bunch of issues. Now let's look at active addresses. Another interesting statistic you need to dig into is not only the number of addresses, the chain has 3 million addresses, but those that are active is only 4%. And remember, when you put things in perspective again to Ethereum, they have 66 million addresses. And despite a huge amount of long-term hodlers, they have good levels of activity as well. So again, think about that. But think in terms of the number of addresses. If you take relative market cap per address, like a cost per user, like a stat you use to value things like Facebook and other stuff, it's very different. So Ethereum has 22x the addresses, but only 10x the market cap of Cardano. So it's an interesting thing to think about as well. Now let's look at my price prediction. I put this together in January of this year. And at the time, Cardano was 17 cents. And I never did. I thought about doing a should I buy, but I thought, there were other chains that were going to have a lot more explosive growth. I wasn't interested in 10x at the beginning of the bull run. And my price prediction in January 2021 was $1.89. Look how close we are now. It's quite magnificent. We actually blew through, and when I do my price predictions, I'm heavily sandbagged as well. Now, what also happened is I got very bullish on Cardano. I said, maybe there's something here. So this summer, I updated my price prediction to about 350 because I thought the Alonzo hard fork, Mary, and smart contracts and the launch would be hugely successful and truly amazing. And I listened, as I said, to Charles. He's very convincing. And the rest is history. So I thought maybe we'd go to 350. Again, the rest of the world was saying 20 bucks. I was saying, okay, maybe 350. And we got to $3 and change. So let's now talk about the meat of this video. Should we exit or should we hold and wait for $10? And that's the question. From all the data I've showed you, there's a lot of red flags here. There's a lot of lack of adoption. Maybe 22 will be a blockbuster year. Sometimes Charles even said, maybe it's 2025, maybe it's 2030. I don't know. This thing also is supposed to be the best peer-reviewed, engineered third series of blockchain or whatever they call it. We don't know where this is going to go. Okay, we're just investors. But the question is, I see way more red flags and I see zero positives right now. So let's get to the meat here of where I see my exit levels for this chain. And again, remember, whales are planning to dump. They'll probably dump before 297 this time around. So do you want to be caught up by the whales or do you want to preserve your bags? So here I have my different exit levels as usual based on Fibonacci levels and a couple of other factors. So the first support level, which I thought was $1.45, we crashed through that. And we're actually below it right now. And that's the 0.786. But after a big bump up from $1.20, it's beginning to get closer to that support level, $1.45. For those people who want to jump on faster horses, they could elect to sell a little bit here and take some money off the table, especially if you have a low cost basis and you want to jump on something like Luna or Solana that are just doing so well compared to this particular chain. The second level, support level number 2, is the 0.618 fib. It's at $1.89. Third level is $2.01, i.e. the 0.5 fib level. The resistance level number 1 is at 226. Resistance level number 2 is 255, and then all the way up to $3. So let's punch this into our exit model. and see exactly what the opportunity cost would look like if you were to exit based on this. So this is, I think, the third one of these videos I've done, fourth, and you guys seem to like it. So here it is. This is, again, the model based on where you exit. Now, it assumes an average cost basis of 80 cents. So I looked at a lot of people's cost basis that they have out there, and that tends to be pretty representative. Not everybody got in at 17 cents at the beginning of the year. Some people got in at 2 cents last year. Congrats to them. But now it should be seriously a time of, you want to hold this forever and wait for Godot, or take some money off the table. So as usual, 5 exit levels I showed you on the fib levels. First one would be a sale at $1.89. So your gains will be $1.09, assuming an 80% cost basis. And that's a pretty impressive 136% gain. Not bad. And from that, you'd sell 20% of your tokens, which if you have 1,000 tokens, you'd sell 200, leaving a token balance of 800. Now, as I go through this model, you will see the profit if you hodled, i.e. didn't sell anything, and the money you're taking off the table. Second level is $2. Third level is $2.22. Fourth level is $2.54. And the fifth and final level is $2.98. Will we go to $3.50, $4? Maybe. If the whole market goes parabolic, it could easily go to $4.50. Who knows? But the odds are low that this will happen. So it's good to kind of, as I like to layer in to tokens, I like to layer out as well. So with this, you have the profit per sale aggregated from your initial $800 investment. You'll make a profit of $1,526 using this exit plan. If you hold and wait for $3, you'll make $2,180. So your opportunity cost of selling early is only $650. Remember, that is the key here. Layering out isn't giving up or waving the white flag. You actually just leave a little bit of money on the table. You take it all off and you take it all early. Imagine the market crashes and Cardano goes back to $1. What are you going to do then? Sell at $1 or just wait another year, or put your money on faster horses? So that's the message here, everybody. Take a screenshot, build your own model, look at your own cost basis, think about where you want to exit. But that's kind of what I would do. So conclusion, everybody, hope is not a strategy. Remember that. Don't wait. Don't listen to people that are pumping. Charles is overly optimistic. If Charles was a CEO of an enterprise software company, like a Fortune 100 software company in the United States, he would have been fired a long time ago because he doesn't deliver and he makes too many excuses. So the conclusion is, if YouTubers are correct, this is going to $10 this bull run. So selling early could have an opportunity cost. So bear that in mind. Again, I'm not giving financial advice here. I'm just looking at data. Now, the delta between layering out and holding is only $600 on an initial investment. So you're not leaving that much on the table. Your ROI of layering out is 91% versus holding is 172%. And remember, whales dump at 297 and maybe earlier based on the performance. So just don't be left holding the bag, everybody. Again, I'm objective. I work for you guys. I do what you want. And that's it. With that, remember this quote as well from Bernard. You've heard it from me, talked about him before. I made my money by selling too soon. Lots of wisdom there, everybody. So with that, hope you like the content. Hit the like and subscribe if you're not already. Again, the most objective money-making information on the interwebs. So I know this is a controversial one. See that? I've never had so many down thumbs. So hopefully the people will give the up thumbs to outweigh the down thumbs. But I knew that would happen. But nobody else will tell you to sell, but I will. Thank you all. Happy Christmas, everybody. I will see you soon.